I remember the days when Instagram was shut down and everybody would be so concerned for the hardworking Instagram models, who would be out of their livelihood. How would they pay rent? How would they live? Hey everybody, welcome to my channel, The Bliss Life. My name is Jat. Today I'm going to be talking about something crazy that I did. I opened a position on Facebook for the first time in my life. I think the first time I did it is when they actually went IPO'd at like 40 something. Obviously, I was in university. I was a lot broke back then, and with all the uncertainty, I was like, okay, fuck it, and I sold. But now I opened up a position. I bought 100 shares today, and I'm actually going to go through the financials. I did not go through the financials. I did not go through anything. I just knew that the market cap was decimated in the past few days because of their earnings. They had more R&D spend because they're working on the metaverse and all the technologies around it. And this is a strategic position that you have to take. Either you love it or you hate it, and then you got to decide. And for myself, I do know how much they're investing in Oculus. I've seen it through the industries that I work in. So I do know that Facebook is a big proponent of the metaverse or virtual reality. So I just said, okay, you know what? I use WhatsApp every day. I use Instagram every day. I use Facebook Marketplace to put my rentals on the market, to sell stuff. So I was just like, okay, you know what? Pull the trigger, just do it. And I bought 100 shares. Usually I always buy things in 100 share lots, just because if I want to sell options, I can, and it gives me that flexibility. So now I'm going to go through the financials and I'm going to see like, okay, how bad is it? How bad is it? Because I highly doubt it's that bad. I've seen a lot of articles saying, oh my God, it was a major overreaction. But myself, I'm actually very curious. Don't do this at home. If you're making a make or buy decision, it's always wise to do your homework first. Learn about the company, make sure you're comfortable with the company. But obviously Facebook or Meta is a mega cap. They've been around for years and they're not going anywhere. So I felt a lot more comfort in taking that shot. And yeah, let's just go through the financials. This is going to be a first time reaction. I've never seen any of these things before. I never looked at anything of Facebook. So let's just get going. All right, let's get this going. So I am at the Q4 2021 press release. Now, I'm gonna be running through this quick. Okay, this is how a CPA would look at it and understand this. I've seen the headlines, I've heard the noise, but now I'm looking at it and I'm gonna decide for myself how I feel and whether my investment would have still been done with this new information that I'm gaining. So let's get right into it. So over here, what we see is revenues went up. Margins or income from operations also went up for the full year. And you see they're doing better, 40% instead of 38 last year. So that's good. Check. Net income higher. Check. 3 months ended year over year. Revenues are going up. Check. Income is going down from 46 to 37. Oh my God, what is happening? Why did it drop from 46 to 37? My initial gut feeling is telling me it's probably because of all the spend that everybody's freaking out about in the reality world, the virtual reality world, or the metaverse. So that spend, obviously, it is R&D. There's research and development, but according to US GAAP or IFRS, you cannot capitalize the spend and park it as an asset on your balance sheet unless you can definitely prove that there's a commercial viability, that this spend is going to make money, they're going to have return, a positive return on the spend, and there's like real proof of concept, like it actually works and it's going to be a real thing that people can use. and you know, it's very detailed, but if you can't hit these general principles, then US GAAP or IFRS just says, okay, well, too bad, so sad. You got to run these expenses through the P&L. It's not considered an asset. A lot of people, when they're evaluating companies to buy or sell, they would say, you know what, R&D spend, we're going to treat that as an asset. We're not going to say it's an expense. So it's all about your mindset, but GAAP wants to be consistent across companies. So that's the way it is. So when I look at this, am I freaked out? Absolutely not. It takes money. You need to spend money to make money. And anybody who thinks you can just be sitting around doing the same thing as last year, you're just kidding yourself. So this is okay. Let's keep going here. Fourth quarter, full year ups, daily people. These are new metrics that I've never heard of before because I've never invested in Facebook before. But as I can see here, it just says increase, 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 increase. So everything's going up. Bless. Now in the fourth quarter of 2021, ad impressions delivered on family of apps increased. Average price per ad increased. For the full year 2021, increased by 10%, increased by 24%. I don't know why people are tripping. Like, everything that I'm seeing so far is good. It's good. I'm not mad. Capital expenditures 5.5 to 19. Okay, I have nothing, no benchmark, but it's a lot of money. We repurchased 19 billion and 44 billion in the year, fourth quarter, and in the year. For the full, okay, in the year. Oh my god. Okay, so 19.18 billion in fourth quarter and 44.8. Okay, so let's go full year. This is the vision, right? This is what we're looking at. So they spent 44 billion up to this point buying back the shares. Wait, what's going on? Oh, year to date, my bad. Okay, yeah. So February, okay, I'm missing Jan, but whatever. So the shares were at 270, blah, 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 all the way up to here, all up to December. So they were buying a lot of shares. So it was in the 300 range for the most part. And before, for the first quarter, pretty much, it was under 300. So I guess they had a sick quarter and it peaked. So they bought 19 billion in the last quarter. So in the last quarter, the share price was like around 340, okay, 340, 330, and they bought 19 billion. And then the remaining, what, 25 billion, they bought in the 3 quarters before that. So this is very promising. And they also are able to buy 39 billion. They're authorized by the board, I imagine, to buy back 39. So now the stock is, you know, way below where they were before. You better believe they're definitely contemplating buying back shares, without a doubt. Cash and cash equivalents 48 billion. Okay, great. So if you're going to buy back 38 billion and they only have 48, that means they have 10 billion on cash on hand. Maybe they won't use the entire amount that was authorized here right away. So that's that. Headcount 72,000. Holy, oh my god, they're a huge company. I'm surprised they have this much people. But for a company with 3 billion users, I guess it makes sense. All right, so in this section, we're looking at new financial reporting segment structure and operating results, family of apps, Reality Labs. What does this mean? I've never seen this before. Facebook, Instagram, Messenger, WhatsApp, other services. Okay, cool. Reality Labs, virtual reality, customer hardware, software, and content. Take a step back. Do you really know how many people depend on Instagram for their livelihood? I remember the days when Instagram would shut down and everybody would be so concerned for the hardworking Instagram models, you know, who would be out of their livelihood. You know, how would they pay rent? How would they live? How would they eat? You know, just think about all of these Instagram models who depend on Instagram. You know, these influencers who do so much for the world. How will they live if Instagram is down? Are they going to go to TikTok and, you know, just like start doing some dances? Like, what is going to happen? We cannot be understated how huge these apps are. WhatsApp, without a doubt, is one of the most used chat apps in the world. You know, my family that I have living in the tropics in a village in a remote area is using WhatsApp, and that's how they talk with us here in Canada. So it's these apps are huge. Facebook, I mean, I thought I would never be using Facebook again after I left university and there was no more school projects to coordinate. But then I just got pulled right back in when I started to list my rental properties and had to sell stuff. Facebook Marketplace was the spot. And there's, Facebook garage sale groups. There's Facebook buy and sell, real estate, rental property groups. It just keeps you coming back because it's the best avenue for people to just get shit done. So the family of apps is solid, it's bulletproof, and no matter what people say, there will always be critics. These apps are super valuable in today's day and age. Reality Labs, this is a big bet that the company's making. I do not know what is going on. I heard there was a big release about the meta release and the rebrand, but I skimmed through it. I saw some highlights, but I don't know much, but I do see the numbers. So let's go look at these numbers and try to make sense of what we're looking at. Advertising going up, bless. Family of apps going up, bless. Reality Labs also going up, fantastic. Revenues, good. Bueno. Okay, this is it. This is where I get the concern. Income loss from ops. Family of apps doing great as usual. It's actually doubled in 2 years, 28 to 56. Fantastic. Reality Labs also doubled their losses over 2 years. So they lost about 10 billion. Obviously, this is carrying this. Now, how do I feel about this? Truth is, I'm not too worried. A lot of people say, yeah, but they just lost 10 billion on this. Like, how could you not be worried? They're just blowing money fast. But the truth is, you have to take risk. You have to take calculated risk. You have to innovate. You have to do something that other people do not consider. What Facebook is doing right now is they have about billions of users in their ecosystem. And Facebook has this opportunity to bring all of these users into a new world, into a world where they can interact and be more fluid with one another. And I'm not saying, don't picture like someone just glued into their Oculus or into a virtual reality headset and just, 500 pounds not doing something with their life. But I'm thinking more like, imagine when you have a big artist, a big artist who wants to do a show. And there's many places that they cannot visit for security reasons or scheduling reasons, whatever it might be. And then they say, oh, I'm going to host a wicked virtual reality concert. And people might say, well, it's not the same. Well, I watched my nephew look at a Travis Scott concert with all his buddies. They're like 10, 11 years old. And these guys were absolutely going wild when the concert started on Fortnite. So I do see that there's a market. I do see that there's a market to watch exclusive comedy shows by your favorite comedian who might be charging 60% of the price, and you and your boys can just put on your headset and watch it, or you guys can meet together and put on your headset and drink a beer and be together in the same room, but you're watching the comedian somewhere else, and it's exclusive and it's live and you feel like you're there. So there's possibilities here. I'm definitely not, I'm a social type of person, so I would definitely want to keep my bar experiences at the bar, my club experiences at the club, by seeing people, getting to know them in person. But I could see a need where people are not mobile, people cannot travel, people cannot afford the heavy prices that they have to pay to attend a show, a comedy festival, whatever it might be, or just go on vacation and feel like they're away. I've been to senior homes, and it's depressing as hell to go to a senior home and see how people who used to do so much and have so much life are now, not that flexible and not able to do the things that they used to do. So there is value here, and it's up to Facebook to drive that and make it happen and make the adoption happen. I don't see myself going into the virtual reality world 24/7 or being fully invested in it, but I do see myself, finishing work, walking my dog, and then coming back and putting on a headset and then playing Call of Duty with my friends. I could see myself doing that. All right, so CFO outlook commentary. We expect first year quarter 2022 revenue to be in the range of 27 to 29. First year quarter revenue 27 to 29. So here they said they're at 34, so he's expecting lower revenue. Why would he expect lower revenue? Maybe because I, being in the retail world once upon a time and working for an international retail company, I do know that retail spend decreases in a big way right after Christmas. That's a given. Right after Christmas, people aren't spending that much. So if people aren't spending that much, then advertising budgets also drop. It only makes sense. So I get why they're calling for a lower range, but obviously, oh yeah, I'm so stupid. The next sentence just answers it, which still represents a growth of 311%. So it's still a growth compared to last year. So this is positive. We expect our year-over-year growth in the first quarter to be impacted by headwinds to both impression and price growth. On the impression side, we expect continued headwinds from increased competition for people's times and a shift of engagement within our apps towards video services like Reels, which monetize at lower rates than feeds and stories, right? Because Reels, people just going, and then when they see an ad, they just say, fuck it, let's keep going. So I get it. On the pricing side, we expect growth to be negatively impacted by a few factors. First, we will lap a period in which Apple iOS's changes were not in effect. We anticipate modestly increasing ad targeting and measurement headwinds from platform and regulatory changes. Second, we will lap a period of strong demand in prior year, and we're hearing from advertisers that macroeconomic challenges like cost inflation and supply chain disruptions are impacting advertiser budgets. Oh my god. Doom and gloom. Okay. Finally, based on the current exchange rates, we expect foreign currency to be a headwind to year growth. Okay, yeah, because it's US dollars, right? Okay, so my takeaway from all of this is run for your life. No, I'm just kidding. I think it's okay. I mean, yeah, I heard about the Apple iOS changes. That's great. That's great for privacy. For Facebook, it is going to be a challenge to overcome that because I'm almost sure that WhatsApp would be listening to me when I was at the gym on my Android phone. I'd be talking to people about like workout shakes or like pre-workout shakes, and then suddenly, magically, those would be in my Instagram ads or Facebook ads. So I don't know. Maybe it's a coincidence. I highly doubt it. But with these Apple iOS changes, I'm sure it's going to make some difference. In addition, as previously noted, we also continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on European operations. I don't know what the story here is. I would imagine that Europe wants people to hold the data in Europe. The data in Europe belongs to Europeans, and if that data is being transferred out to advertisers in America that then turn around and target Europeans through subsidiaries in Europe, then maybe the advertising dollars is at risk because you cannot target them with accurate data on what they like, what they do, what they see, where they are, blah blah blah. We expect 2022 total expenses to be in the range of 90 to 95, updated from prior 91-97. People don't like hearing that. Like, why are you spending more? Our anticipated expense growth is driven by investments, that's okay, in product talent, technical and product talent and infrastructure related costs. Okay. We expect 2022 capital expenditures, including payments on finance lease, to be in the range of 29 to 34, unchanged. Investment in data center service network infrastructure. As we discussed previously, this range reflects a significant increase in our artificial intelligence and machine learning investments, which will support a number of areas across our family of apps. While our reality labs products and services may require more infrastructure capacity in the future, they do not require substantial capacity today and are not a significant driver of 2022 expenditures. Absent any changes to US law, we expect our full year 2022 tax rate to be similar. True. All right, so first glance at the financials. I'm excited. Okay. What are we looking at? So this is consolidated 12 months, 3 months, unaudited. What? That would be audited. Isn't this Q4 like 12 months ended? Shouldn't it say audited? That's weird. Okay. So revenue 117.22, R&D is going up. It went up 6 mil. Cost of revenue went up 6 mil. But that's okay. Marketing sales more or less the same. Diluted, they have 2.859. See, they went down, so they're buying back shares, or the numbers changed because whatever was vested was forfeited. I'm not too sure, but they have 2.8 billion shares outstanding. 2.8 billion shares. Oh wow, okay, 2.8 billion shares. That's interesting. Share-based comp. So there's 9 billion of share-based comp, and the largest it's going into is R&D. Okay. So shareholders are getting diluted 9 billion a year. Insane. Just because I'm a huge investor in Palantir and I know how people lose their minds about SBC. But you see in Facebook's case, they're obviously super profitable. So, shareholders are more than happy to keep that talent in-house and keep them happy. Okay. So consolidated balance sheet. What are we looking at here? Cash and cash equivalents as of December 31st. Okay. 16.7 billion, 31. Okay, so this is obviously two things that they consider combined. Marketable securities, I wonder what they're invested in. It might be like safe stuff. AR 14 bill. Okay, that must be from clients. Equity investments, property, plant, and a thing. Goodwill, I hate goodwill. 19 billion in goodwill. Okay, so 145 billion in assets, because I hate goodwill. I do not consider that real. So 145 billion, but out of the 145, we got 47 cash. Debts, very little debts. Okay, very little debts. 14 in accrued liabilities, not too bad. Okay, so 41 billion in total liabilities. The worst case scenario, if someone's like, give me all my money, give me it. 41 billion is what they would need to pay, but they have access to 47 right there. 47, 48. Not bad. So they good. Cash flows from operating activities. Let's just look at the 12 months. $58 billion in cash flows from operating activities. This is huge. Just keep thinking about Palantir. They're targeting to make 400 million in 2021 year end, and Facebook is making $58 billion, which is huge. It's huge. Amazing. I do not know why people freak out like they did for Facebook. I mean, look, what's the market cap? 631. Okay, so 631. Just do the maths, man. Do the maths. 631, and they make 57 billion. 630 times 57. Oh, am I doing this wrong? 630. Yeah, I'm doing it right. Yeah. What the fuck? What? Why are people tripping? I do not get it. Bro, what? What? Yo, they make 58 billion a year. They're trading at 11 times cash flow. Like the market cap is 630. Oh, I even wrote that wrong. It's a bit less, but 630 divided by 50, what? 57? Yeah, 11 times cash flow. People are tripping over Facebook when their valuation is 11 times cash flow. Are you kidding me? Are you kidding me? I can't believe this. This is an amazing deal. Like, you should be very, very interested by this. Like, okay, it's like saying, you know, you might be wondering, okay, but dude, chill, like it's 11 times cash flow. But think about it. If you're buying any business, usually it's 10 to 15 times EBITDA or 10 to 15 times cash flow. You know, like that's the way I look at it. So cash flow from operating activities, they're trading at 11 times. Like that's the pricing today. That's super, super fair. Like it's super fair. It's very fair. Ridiculous. Cash flow from investing. So they invested 7. What did they do? They bought property equipment. They sold their shares. Maturities of marketable securities. So this must be like GICs. Okay. Taxes paid. Financing activities. Repurchase. They bought back 44 billion. Oh my God, people are overreacting in my opinion. Either I am too ridiculous and I'm okay with 11 times cash flow for a company to be valued. I think that's super fair or super like reasonable. But maybe someone might be like, no, they need to make 630 billion for me to pay this price today. You know, like what's your price? What's your magic number? Like, I would want to be involved in a super innovative company where I knew, okay, well, you know, my ownership time, if I hold it for 10 years, then I know they made their money. Like the price I paid, it takes them 10 years to justify that. And I think that's fine, because if I'm holding over a long-term horizon, then after that it's gravy. You know what I mean? Like they're making more than that. If you have a 20-year horizon on Facebook and you're holding this company and they stay static for 20 years because people are addicted to Facebook, WhatsApp, Instagram, you know, everybody's on that shit. Imagine that hook is there and, you know, governments don't ban it or something, then this company would, you know, in 10 years, they make 570 billion. In 20 years, they'll be making over $1 trillion in cash flow. The stock is trading at 630. Like, come on. Very non-traditional the way I'm thinking, but it's I don't think this is a bad deal. Supplemental cash flow data. Okay, nothing that really interests me here. All right, so look, long story short, I do not think my investment of 100 shares is gonna go down the drain. Of course, I anticipate some fluctuations. Did I time the bottom? Nobody knows. I could tell you next week, maybe, or in a few years. But the fact that Facebook is such a profitable company, you know, even if my stop loss gets triggered, I bought at like 232 today, so I pretty much bought at the high of the day. If it goes down to my stop loss level, which was 230.50, that was the trigger, I believe, and I said sell it within 230, then I would lose about $300, which is negligible. But I would definitely be following this closely to see if I can buy back again. So, you know, if you like what you're hearing, you know, the way I think about things, my analysis, then, you know, definitely hit the subscribe button. It means a lot to me. You know, definitely leave a comment, hit the like button, and I'll see you on the next one. I'm gonna keep running through these materials. It's like 12 at night right now, 12 p.m. Or 12 a.m. at night, so I'm not gonna try to keep recording, because, you know, when you start reading, you start to get a little bit woozy, so I'm gonna just read it myself. But if I do see anything crazy, I'll make sure to turn the camera back on and let you all know about it. So talk to you soon, and I'll see you on the next video.